Hi, Harry here with the Rant on June 16th. Note that I'm recording this near the close on Thursday instead of near the open on Friday because of travel. Now, the markets I'm so thankful they're doing what we said they would do. We are clearly now in this first crash, which marks the end of a major bubble like this because, we've seen these bubbles can go on and on. Because we're seeing the markets down enough. We are finally in the fifth wave, now note this, of the first wave of this bigger crash. So the fifth wave of the first wave, okay? And that wave has now gone to new lows, and that means it could bottom anytime, but it looks to me like it's gonna go a good bit lower still. And I have a cycle low around mid-July. So we're already down 34.5% on the NASDAQ. Why is that important? My study of all these bubble crashes over the last 120 years say they tend to happen, the first crash tends to be down 28% to 50% in the first 2 to 4.3 months, okay? So the only thing different here is we're 6 months in, almost, coming up, and I'm thinking this may bottom in mid-July, but we're coming into that zone. 34.5% for the NASDAQ, 33% for the small cap Russell 2000, 24% for the S&P, which has been holding up the best, but it will, as I've been warning, it will keep catching up. So I think we're probably going down another 5, 6, 7%, maybe more in stocks. And again, mid-July's the best target. So people who are short stocks, stay short. It's kind of a bit late to short stocks here. And the next time to get short stocks or to look at getting out, if you never did, we should get a good bounce between, say, mid-July, if we bottom there, and say mid-September. So, and again, those are just good guesses, okay? But if this first wave takes about 6 months or a little more, then we ought to have at least a couple month bounce that'll be substantial. We might recover 30, 40, even 50% of the loss, and then people can get out in a better position, or people who did short can get back out maybe a few weeks ahead in mid-June and get back short again around there. And of course, I'll be advising all the way on that. The more important events right now are around the bond market. The Treasury bonds, the 10 and 30 year are the safe haven, not gold, and gold has gone nowhere, as I warned, and will go down farther. And so that's where you want to be. You have two ways to play this. You can short stocks, or you can be long the bonds. And the bonds are less volatile, and there's still a lot of potential here. So the TLT is the 20-year Treasury bond equivalent in an ETF that I've been touting. Also ZROZ, Z-R-O-Z, that's 25-year average. So it's just more of the 30-year treasuries versus the 10 to average 25 years, okay? Those are the ones that will do the best with the least volatility in a deflationary crash like we're seeing and already in, okay? So I was looking at 108, okay, on TLT as the best buy signal. Well, we hit that this morning on Thursday. 108.12, okay, very close. Now we bounced back to almost 110. We could go back down and retest that 108 level, even go a little below that, but this I've been warning, is the time to buy these Treasury bonds, because I have a target, if this rally lasts into the end of next year, which is just a good guess on this scenario, it could be up to 196. That's an 81% gain. So I showed that in the June 4th Harry's take just recently, okay? So go back and review that chart, very important chart. That's the biggest opportunity right now. These bonds look like they're bottoming or just bottomed on Thursday at 108.16. And big rally over the next year or so, 60, 70, 80, 90% in Treasury bonds, the safest vehicle, the safest investment on earth, which does so, that's why it does so well in bad times like this and big crashes. So that's what we're looking at. Treasury bonds up, stocks down. I think stocks are most likely to continue down in this first wave. We're in the fifth wave. We've got further to go likely, maybe 5, 6% lower. And again, that would put the NASDAQ closer to 40%, right in that zone of first crashes, 28 to 50, average 41%. So stay tuned. Things are really going our way here. This is a time to make money when markets are going backwards, okay? Which gives you the opportunity down the road to make way more money when they turn up longer term again between 2024 and 37. So be patient here. Continue to be out of the markets or short stocks or long treasury bonds, and this will pay off handsomely in the weeks and months and the next few years likely. I think it's going to be early 2024, late 2023 at the earliest, till we come out of this. And remember, given how high we've gone and how long they've extended this bubble, you know, the Federal Reserve and central banks around the world, we have to fall harder and faster than even the 29-32 crash likely. So put on your seatbelts and I'll keep you updated.